Welcome to Virtual Deltek Insight 2020. This session is on how to DCAA proof your Costpoint system. I'm Kenneth Parsons, the co-founder and CEO of PDS Consulting Solutions in Knoxville, Tennessee. We are a strategic consulting partner with Deltek and have been a partner with Deltek for the past 20 years. I started out in the GovCon industry almost 35 years ago and have worked with a variety of accounting systems and meeting DCAA compliance requirements through the years. Specifically over the past 20 to 25 years, we've worked exclusively on Deltek products, Deltek Costpoint. My partner and I, Laura Davis, worked on one of the first systems that was rolled out as a beta site for Costpoint in the early 1990s. So we're going to go through in this session how to DCAA proof your system, and we're basically going to cover a lot of the different areas for a compliant system. So the agenda today in this session is to look at elements of a compliant system, to look at matching elements for that compliant system that are covered in Costpoint, and we're going to review best practices along the way. And we're at the end of the summary here, we're going to wrap up how to handle a DCAA audit and audit requests when they come in based on proposals, based on floor checks, based on a variety of different audits. The agenda here will go through the best tips and tricks there to get you through successfully that audit. So we're going to start out with why you're required to have a compliant government contract accounting system. And so it comes from the FAR, the Federal Acquisition Regulations, which I'm sure most of you are familiar with, based on cost-type contracts. The first requirement specifically that's there in the FAR is FAR 16301-3. And it basically speaks to the fact that under cost reimbursement contracts, they can only be used when the contractor can prove that the accounting system is adequate and can determine costs applicable to projects, contracts, work orders, task orders, that you can actually track that cost and be able to report on it. So from there, there's usually within a proposal when you're bidding on a contract, the cost type contracts normally in a proposal or an RFP have a statement where you have to certify in the proposal that you meet this requirement, either that you can prove you already have an existing compliant accounting system, or by the time of the award, you're going to have a system implemented and up and running. So in addition to cost type contracts, there are some requirements under fixed type contracts. So fixed price contracts that have progress payments also require an adequate accounting system, because you're billing based on milestones and the frequency that's there. The government contractor's accounting office want to be able to validate that you're able to track to the milestones and be able to bill based on the progression of the contract. There are two more areas in government contracting in the FAR that require an adequate accounting system, and it's a fixed price contract that with retroactive price determinations. Basically here, they want to be able to protect not only the government, but the contractor against cost fluctuations in labor cost and material cost. So an adequate accounting system has to be able to track those costs and to be able to show where those fluctuations have occurred and why. And then lastly, another area that in fixed price contracting is incentive type contracts. The contractor's accounting system needs to show that it's adequate to be able to negotiate performance based on target cost and show target cost as the basis. But when you've been incentivized and show greater performance, you have to be able to show those metrics. So any compliant accounting system in federal government contracting is built in accordance with GAAP, the generally accepted accounting principles. And the Federal Acquisition Regulations fully encompass GAAP. So within that are also the cost accounting standards. Not every company starts off having applicable cost accounting standard requirements there, but the one standing principle that is a defined element in a compliant accounting system is to have a cost accounting period, and that comes from Cost Accounting Standard 406. So within that, then your system must be an accrual-based system, first and foremost. So that means you have to be able to accrue expenses, to accrue PTO, for example, and you also have to be able to use the matching principle in GAAP. Revenue and expenses have to be recorded in the same time period that they're incurred, so that they can be tracked and be reported accordingly. And then, of course, all of the other requirements that go along with GAAP, for example, capitalization and depreciation of your assets, GAAP-based tracking there. And the one issue that always comes up, and a question that comes up, especially with companies starting out, is can it be a cash-based system? A lot of companies start out cash-based accounting. So for a compliant cost-type contract to have a compliant accounting system in government contracting, it cannot be cash-based. It has to be accrual-based. So next, we're going to be looking at the primary components of a compliant system. And as I start going through this section, I'm going to start correlating that to areas within Costpoint that these areas that we meet and the requirements that are here can be tracked and met within the configuration of your system. So the first area that first and foremost for a compliant system is to be able to segregate between direct cost and indirect cost within your chart of accounts. So in your core chart of accounts, in your accounting system, specifically in Costpoint, then we design, as we're going through the process, a schema that basically segregates between direct cost and indirect cost, starting out to begin with, obviously, with your balance sheet and your P&L accounts. But within the P&L, that section will delineate direct cost from indirect cost. And then we'll be looking at your indirects by your cost pools, your statement of indirects, for example, the indirect rates that you're going to be billing the government by. So, for example, fringe pools, overhead pools, G&A pools. So we'll start segregating cost within the indirect section. And then within the other areas of cost that we are going to pay focused attention to here is unallowable cost, to meet the requirements there, to be able to track your unallowable costs, statutory costs that come from the FAR, and then just project unallowable costs. Sometimes contracting officers make costs unallowable that they just don't want to pay for, unbilled and unallowable cost. So then within that, we're going to look at project costs and how they're tracked by CLINs, contract line items, and activity levels. So within Costpoint, where we handle that is in the project user flow, which is the area where we come in and set up our project work breakdown structure, the WBS. And then another area of compliance is obviously first and foremost your labor tracking by cost objective. So they want to be able to see on timesheet tracking that you're charging to projects final cost objectives, and that in Costpoint we're able to produce labor summary reports that are able to show that detail and break it down. And then summarized within the job cost ledger to be able to tie the job cost ledger to the general ledger. Not all accounting systems are fully interfacing. Costpoint is. It's a fully interfacing accounting system. So the job cost ledger, as most of you probably know, when you post to the job cost ledger, you're posting directly to the general ledger. So we're able to run revenue summary reports at the project level and be able to see in the GL level correlation and posting, and be able to tie those two levels out based on your project summaries and your revenue summaries and your GL detail. And then furthermore, we'll be monitoring your indirect rates via the statement of indirects, the cost pool section in Costpoint. We'll speak a little bit to that further down. Finally, for a compliant system is monitoring your incurred cost, your billed and funded values, and that also is provided in a canned report that comes directly out of Costpoint. So when we're configuring your system in any compliant accounting system, but specifically in Costpoint, we like to start off with the system and the breakdown of the chart of accounts that's going to be applicable to your incurred cost submissions. Not all companies have to complete incurred cost submissions each year, but if you have a cost type contract, which is what this whole section is about, then you're going to be compiling and submitting an incurred cost submission every year. And we start off with breaking down the chart of accounts into areas that comply right off the bat with incurred cost submission in the same format. So we're going to start with, for example, here, breaking down direct from indirect, indirect by the cost pools, and then once again the unallowable cost. And so assets we normally start out with on the balance sheet for assets and liability, a 1000 or a 1 series as you see here for assets, a 2 series for liabilities, a 3 series for your equity accounts, your owner equities, and then you get into revenue starting with a 4 series. The 5, 6, 7, 8, and 9 basically are all of your costs that are being segregated between your direct cost and your indirects. As you see, 6 are fringes, 7s are overheads, 8s are G&As, and the 9 series is unallowable. This is basically the standard format that we're looking at with incurred cost submission. So the next step that we do, we come in and we actually make segments out of the chart of accounts. So as you can see here in the graphic in the first column under account, we've broken down the chart of accounts into 3 segments. The first segment there being a 5 series, meaning that it's direct. And if you look at the bottom of the graphic for direct travel, you can see that the middle segment here is used for grouping, for example, travel. And then the third segment, 0, 1, 2, and 3, are breaking down the streams of travel. And so that helps you when you're doing the reporting, not only for your project reporting, for your billing, but also at the end of the year when you have to do your incurred cost submissions to be able to track the different streams and types of cost. Once we have the chart of accounts set up, then we further come in within Costpoint, and to keep things compliant and to cut down on erroneous charges, Costpoint has a section in it that's called the project account groups. And you think of it as a reverse pyramid. At the top of the pyramid, you've got the world, meaning your full chart of accounts, your organizational structure, your project charges from your work breakdown structure. So this basically hones in on the specific accounts that are being able to be allowed to be charged to a project. And so we come in this graphic here, you have your full chart of accounts on the left-hand side, and then we give it basically a designator to identify the type. For example, if it's a labor account, a direct labor account, there'll be a labor category function code that we'll assign it to. And then it becomes part of the project account group that's used for charging project cost. So it helps you further with the reverse pyramid narrow down erroneous charges from the world of your chart of accounts to major groups like direct cost, indirect cost for indirect projects, and all the way down to, for example, if you have a contract that has a project line item in it or a CLIN, say for travel, we may just have a project account group that's set up with a travel charge in it, with the travel GL accounts in it, and that's the only thing that can charge that cost line item in your projects. So we come in next, and the first thing that we want to do is understand your project reporting so that the required elements that are there for an adequate and accounting system to look at project reporting requirements for billing and revenue recognition and for project status reports, for managing your project. So we're building a work breakdown structure at that point that's based on the actual contract requirements that you have to comply with. And within that, to be compliant in the accounting system, then we need to be able to track the contract and funded value levels, your billing levels within the work breakdown structure. For example, your work breakdown structure may have 6 or 7 line items to it. You may be billing and doing revenue recognition at the top level, or you may be doing billing down at the task level. So within Costpoint, we're able to capture all these different levels, the funding level, the billing level, the revenue level, and be able to track contract ceilings, which is a requirement to be able to track those and to be able to report against the ceilings within your project and within your contract. So here's an example of what this looks like in Costpoint. So we've got the activity levels here basically broken down. The top level being a grouping of the overall contract. The second level may be your CLIN. The third level may be a task, and then a work order or a sub-work order or task and subtask. And so the different activity levels are where we would be able, at the lowest level here, to charge expenses, labor, and materials to your projects. So to follow on to labor, one of the major requirements in an adequate accounting system is to be able to track your labor by cost objective. So you've got to have good, solid timekeeping policies. You've got to be able to validate your timesheets with your labor distribution in your general ledger in your accounting system. So that means a labor distribution using your general ledger detail reports to look at total labor, and then using your project ledger detail reports, which come canned out of Costpoint directly along with your project status report, to track the different streams of labor that have been charged against your project, so that you can validate at the end of the day your labor to billings and your labor charges to your payroll to tie those out. And each of those come in with canned reports out of Costpoint by cost objective with a timesheet history and a project labor summary report. So elements that we're going to be looking at here to identify the labor costs are basically all inclusive of an electronic timesheet. So today with time collection, all of this is incorporated, all of these requirements that are there. The system generates a timesheet for you for each reporting period, and each person has their own unique login. At that point, they're able to record their own time. They have authorized project numbers that are based on project defaults or labor defaults that we set up in Costpoint to be able to further track the cost and to keep down erroneous charges. The employees, obviously, for a compliance system, are required in total time accounting to be able to report their time no less than daily. The corrections are also to be tracked in the system. Time collection in Costpoint definitely tracks all of those with date stamps, reasons for changes, and who made the change. And then the requirement is there for the employee to sign the timesheet, either electronically or in paper, depending upon what your system is. You're probably using time collection, so it's an electronic, or some sort of time collection, so it's an electronic timesheet. That's a requirement. And then obviously the supervisor's signature and approval for any changes that need to be made, which those are also tracked. So then, to be able to meet the further requirements of direct versus indirect labor, one of the requirements in the system is to be able to identify how labor is allocated on the timesheets for the payroll period, so that you can reconcile the individual employee timesheets to their direct and indirect labor, and that their payroll is recorded and reconciled in a fashion that tracks direct and indirect charges of the employees, and further be able to see the allocations if it's an indirect using the cost pools, if the charges are allocated through an indirect cost rate to a project. All of that is provided in Costpoint through the statement of indirects to be able to see how the indirect rates are applied to projects for indirect charges. So core procedures that need to be in place for timekeeping as a requirement, if you're audited in particular, but it's good just to have this policy and procedure in place, is to document everything as far as your procedure for total time accounting in the system, or whatever system you're using, if it's paper or if it's an electronic timesheet system like time collection with Costpoint. So we want to be able to have the instructions for the preparation of the timesheets, how corrections are made to the timesheets, what intervals they're made in, basically all procedures there for completion and submission of timesheets to your supervisors. And at that point, the preparation for supervisors to be able to review, to be able to run reports, and to analyze the cost and make sure that charges have been properly placed on the timesheet. So with the general ledger, we're able to come in and look at the general ledger and run reports to validate these charges, not only labor, but materials, other direct cost to the job cost ledger. So within Costpoint, we have the compliance built out of the box with the trial balance and the project ledger detail, totally encompassing and fully interfacing the job cost ledger. As I mentioned earlier, your charges go directly to the general ledger whenever a project charge is made. And so we have project status reports that are canned in the system, revenue summary reports to be able to balance total cost to the revenue in the GL. Project labor summaries, as we mentioned, and also a critical piece for the requirement here is to be able to perform your unbilled analysis on unbilled cost. And here is another graphic of a canned report in the system that basically shows your revenue summary by project. So we're able, with different parameters in here in the lower right-hand corner of this graphic, to be able to run this report in a variety of ways. And here in the next slide is an example of that report that shows the revenue summary. This shows us each period when we calculated the revenue, all the direct cost, how the revenue is built up, and basically ties into the requirements for the project with your contract ceilings. So the next thing we're going to look at is how to segregate your unallowable costs. Now that we've got our chart of accounts built with direct and indirect costs, we've got our projects built, we're going to be now segregating the unallowable costs in the system, which is a key and critical requirement within an adequate accounting system to DCAA proof your system. So first and foremost, you want to have an unallowable policy that's written and that's been reviewed and documented, so that when they come in, that's the first thing on an audit that you're able to show them, is that you have this policy. So we have a specific range of accounts that we use for that. Normally a 9 series is what's used when we're developing a chart of accounts out of the box, once again to tie into your incurred cost submission. And so another element within the procedure, we want to be able to show that we're properly training all employees and that we've gone through different training classes and that they've completed different training classes and reviewed and signed off on your unallowable policy. And within that, one of the core areas, which is covered in the expense module within Costpoint, is to be able to track travel cost and meet the per diem requirements that are there for allowable and unallowable or reasonable travel if allowability if the per diem rates can't be met. So we need to be able to track and document the reasonableness if we're outside of those rates. And then within that policy, we want to make sure that we're speaking to internal reviews of the accounts for travel and for other charges, your unallowables, your bank charges, your interest charges, legal, consulting, alcohol, all of the statutory unallowables per the FAR. So another key area that's in Costpoint that's a requirement within an adequate accounting system is to be able to produce your statement of indirects, your indirect rates from the cost pool section of Costpoint that are based on your indirect rate structure. And in some cases, you may have provisionals that you have in place that DCAA is auditing. And so they may come in and do a desk audit to approve your provisional billing rates. So the system is built to accommodate the rate structure of huge corporations down to very small companies that just have a fringe of overhead and G&A. We've got some companies that have hundreds of indirect rate pools. I don't recommend that, but but the flexibility that's there that shows you that Costpoint can handle anything within the statement of indirects reporting. And within the module there, we're able to accommodate the three core requirements within an adequate accounting system to be able to track your targets, which are your internal targets that you're tracking to hold down cost, to measure cost, and then your provisional, which is what you're billing the government for on your contracts, and then obviously compare those to actual performance. So budget versus actual is a big key area within this module to be able to track indirect rates, which basically show you your performance overall of your company. So within that, then within the costs that we're monitoring, once we've got all of our costs reported and collected, we're looking and we reconciled the general ledger, we tied all of our costs out, we looked at our project status reports. Now we want to monitor where we are with billing values as far as the contracts and funded value. All of this is taken care of in the Costpoint project user flow, once again, where your modifications and all of your contract funding values, period of performance, all of that is all tracked and maintained. And so you're required to keep all of those up to date for those cost type contracts in a compliant accounting system. And the revenue summary report is one of the reports that will be able to show you all of that detail in one consolidated report within Costpoint. And here's one of the reports, the project status report and the project revenue summary report that I just referred to be able to help you tie and reconcile the cost to this summary, to be able to see the detail as you see by project on the left-hand side of the graphic. And then in the gray area, these are all areas that can be custom chosen from within your report parameters, once again, to meet the requirements that you need for reporting and for reconciliations. So best practice, the best practice here within your accounting system, and to be able to stay compliant and to be able to meet an audit and to DCAA proof your system, is to keep everything current. Keep your mods current as your contracts come in, your funding values, your period of performance. Utilize workforces in Costpoint. Project workforces are key for, once again, keeping down erroneous traffic charges to your projects. Inactivate any old projects in your system. Always either monthly, periodically go through and reconcile your build to incurred cost on a cumulative basis. There's a lot of reports in Costpoint that are canned, that are able to help you run that cost out, to be able to tie it back and keep up with it, because you're at the end of the year, you don't want to wait when your incurred cost submission comes around and have to reconcile all that cost. So another thing is to do frequent reconciliations of your balance sheet accounts for your accruals and all the areas that basically are impacted as you go throughout the process of the year, accruing cost and relieving those costs, especially if you're in manufacturing. You have WIP accounts, WIP accruals, and WIP relief, different accounts that are there that need to be kept up with as far as project cost, to reconcile those costs back and forth from your projects to your balance sheet accruals. And also look at any indirect rate variances. You're going to have a wonderful report with the statement of indirects from the cost pool module to be able to see the rate variances, target versus actual. And then once again, always monitor, which there are plenty of different tasks and radio buttons within the contract module of Costpoint to be able to set your contract funded values against billings to let you know how you are performing and when you're bumping up against those values. So policies and procedures, as a minimum, you basically want a policy and procedure to show how chart of accounts are added, the format like we spoke to earlier, and the process for activating and inactivating those chart of accounts. Also job costing, your work breakdown structure, the same thing, tracking jobs, the next job number, to have a centralized contract file where you're tracking these project numbers and keeping track of the costing for the projects as they're assigned. And once again, a direct versus indirect policy is definitely beneficial when DCAA comes in and starts looking at your statement of indirects and your incurred cost. Timekeeping policies we spoke to, very detailed in some of the previous slides. Those are definitely a major requirement for total time accounting. And then your billing processes. So those processes need to be documented and have policies and procedures there for what you go through as far as reconciliation for billing costs to the government. And as we mentioned, definitely a policy for unallowable costs. And another one that usually gets asked for if you have a bonus plan right off the bat. When DCAA comes in, they want to see your bonus plan policy. So what to expect when DCAA does come in, or they call you, or they knock on the door, or they show up for a timesheet audit. floor check. So the first thing you want to do is sit down and require them to give you an entrance conference and tell you what the scope of the audit is going to be. And then basically at that point, they're going to request information from you. You want to track that information request, document it, keep a track of it, keep a copy of everything you give them, your chart of accounts, your manuals, your policies and procedures. Have an exact copy of everything that's given so that you can track that audit from start to finish. If they do field work, or they do a walkthrough, or they come in and they're only there for a few hours and they go back and do a desk audit, you want to keep track of all of that, everything that you're providing them to do their desk audit. And then also track and keep notes on any follow-up phone calls or questions. Obviously, email is a great way to track all of this. If you can do it all in email, that's the perfect way to keep up with the correspondence. Then they're going to issue you a draft audit report. And at that point, you're able to review the conditions and what they're recommending for corrective action. You can disagree at that point. You can show what you've done, what they missed. Basically, at that point, it's your opportunity to go through and dispute anything that they found as far as findings in the audit report. And then they're going to issue a final audit report, and you have to request that report. That goes directly to the ACO. And from there, you'll be dealing with your ACO to determine whether there's any corrective action plans, or if it's something that you're just going to naturally resolve with systems that you're going to put in place, policies and procedures, for example, or migrate to an accounting system similar to Costpoint. If you're not in Costpoint, that you're going to migrate to Costpoint that meets the requirements for an adequate cost type contract. So common issues that you're going to find that come up a lot of times the first time you're being audited, if you haven't been through this before, is probably misclassification of unallowable costs. That's easy to do, especially with travel and per diem and things being over the per diem rate, not being categorized as unallowable. So you're probably, in most cases, going to have inadequate policies and procedures. That's something that we specialize on in our company at PDS as one of our core services in GovCon support, is to help companies not only implement their accounting systems. We're exclusive to Costpoint, so we only implement Costpoint. And then we also deal with all of your GovCon compliance. So we help you with policies and procedures. And one of the things that always comes about right off the bat, as I mentioned, they're usually going to ask your unallowable policy and your bonus policy immediately. So you want to be able to, at that point when they're in there, be able to show that you've got source documents for everything, for your billings and your payments. So documentation is critical, whether it's electronic or in hard copy. Another thing that they're also going to, that might be a common audit finding is basically cash flow and financial capability. When they're looking at your system, they want to make sure, one of the things that you want to obviously keep up with and have some key vendors, obviously, that you're paying timely in the normal course of business. And once again, be able to document that. So inadequate documentation is one of the major areas that comes up in most audits and in most audit findings. So that's the overall presentation here for how to DCAA proof your system, tied into what Deltek Costpoint provides completely out of the box for you, configurable to be able to get you through an audit. So we have the chat box available here, and I'm monitoring the chat box. If you have any questions, I'll be glad to take a minute here and answer them and keep the chat going. And also, you can reach me here. If you have any questions, please email me, and enjoy the rest of your virtual Deltek Insight. Have a great day.